Welcome to Stocks in Translation, broadcasting from the New York Stock Exchange. I'm Jared Blikre, your host, and with me, as always, is a voice of the people, Sydnee Freed. First, please like, subscribe, and comment on Stocks in Translation on Spotify, Apple Music, Amazon, or YouTube. And today we are welcoming Dan Newman, who's the CEO of Futurum Group. He is the author of 7 books, including Human Machine, which explores the relationship between humans and tech, including AI. So we're going to lean heavily into tech talk today. And our word of the day is bubble. We throw it around a lot when asset prices happen to be soaring. So how does AI fit into the paradigm? And this episode is brought to you by the number 90%. That's Taiwan's share of the global pie for advanced semiconductor manufacturing, what it means to be this dependent on one island for the future of tech. So Dan, I'd love to get your take on what you think of the recent market action. It's been kind of crazy. Things have settled down a little bit. How are you seeing it?
Have you ever seen such a massive convergence of different external factors? You've got the tech trade, the word of the day, bubble. People have been saying for a while it's a bubble, but it wasn't the trade itself that took the markets down. Then you've got tariffs and the trade wars as a whole. This is a complete paradigm shift in every single way. We are reordering the world's trade structure, and whether you like it or not, no matter what side of politics you're on, this is happening. And so for a lot of people, I think they were unprepared, even though in many ways, the administration was sort of signaling what was going to happen. It was like that whole take Trump seriously, not literally, or literally not seriously thing that everyone has. And so you see everything from hedge funds having massive losses and dealing with unwinding. You're seeing the dollar being manipulated. You're seeing bonds being played with. You're seeing names like NVIDIA that were rock solid gold over the last couple of years, basically since ChatGPT's advent, falling to now trading at, what did I see, half of the forward earnings of Costco. So people believe Costco is a longer term, more valuable buy than NVIDIA. It's just absolutely wild times.
It is, and we've seen a lot of those correlations break down. And this kind of segues into our word of the day, which is bubble. Now, a market bubble forms when asset prices rise far above their true value, driven by hype or speculation, and it usually ends in a sharp drop or crash. And we've used all qualifying words here, no quantifying, because it's easier to see in hindsight. And so some people will look at the rise and a little bit of a fall here for some of these stocks like NVIDIA or maybe some of the ETFs. But was that really a bubble?
The altcoins were a bubble, okay? Trump coin was a bubble. AI, in many cases, is not a bubble. Now, there are outliers. There were companies that just threw the word AI or .ai into their ticker, and they got explosive growth for a short period of time. That's a bubble. NVIDIA trading at a forward multiple that was no higher than it was 4 and 5 years ago, while growing to $100 billion of free cash flow, while basically owning 94% of a market and powering the world's AI, I don't think it's a bubble. You look at companies like Broadcom powering all the hyperscalers. You look at, just a number of the businesses that are playing out here. Like everything, it's bifurcated. It's not all is a bubble, but in the end, we are at a trade war with China. We are in a global reordering, and AI is actually the difference between global economic leadership over the next few decades and falling behind. So you see why we're spending so much focus on China, because it's either us or it's them, and why we're pulling back NVIDIA, it's because it really matters, not a bubble.
But then what are some of the calling cards of a bubble? Like how can you, I know we said sometimes it's hindsight, but are there some things people can look at ahead of time to see?
Yeah, and I think there are parts of the AI trade, like I went back to and said, look, just saying we're going to do AI, we did a survey, we partnered with a company called Kearney, a big consulting firm. Sure. And we talked to, it was hundreds of CEOs that ran companies over $1 billion of revenue every year. We're asking them what they're focused on and how big of a threat is getting ahead in AI. And the vast majority of them genuinely understood how important it was to get ahead in AI. Now, having said that, you have $325 billion of CapEx. So the bubble of Google and Microsoft and NVIDIA is not a bubble right now because they are investing and they are building. Now, where's the bubble? Do these big infrastructure investments become what I would liken to a Chinese ghost city, right? They built the city, no one goes there. We're building out all this infrastructure, but every quarter you sit around, you listen to Microsoft and they say, oh, we are now generating $10 billion annual run rate from all of this investment. Last I checked, they're gonna spend 80 this year. So I think some of this is, when does it start to translate to those CEOs implementing solutions, and then they go back, we're getting value from this. We're running more efficiently. We have agents that are doing tasks for us and actually helping us make money and run our businesses better. I think that gap in there, that white space, is where a bubble could potentially exist. But there's so much investment going into seeing that that doesn't become a bubble. This is not the internet bubble.
What I hear, and I'll come back to that in a second, what I hear from these tech CEOs is they don't want to be left behind. They see the horizon, and they, notwithstanding all the short-term vicissitudes, which is mainly to the downside, I think they're holding on to that vision. But I am reminded by the tech bubble, and so I want to go back to 2001, where you had, here's an analogy, we had fiber optic cable was being laid down in vast swaths for essentially the first time. And before that, it was dial-up. So we knew everybody needed it, and it's going to be here forever, and we got to lay all this stuff down. But it was overbuilt. And so it became really cheap when we had the dot-com crash. I'm wondering if all this investment just becomes fodder for the next rally in a few years, and we got to go through some kind of correction first.
Well, we are going through some type of correction. That's why I said if you actually saw, I just keep using NVIDIA, but you actually see that their forward earnings isn't really any higher than it was 4 or 5 years ago right now. With all the growth they've had, that's an interesting, that would be interesting given how stable the company's become and how much it has grown. Now, you mentioned the internet bubble. I think diffusion here is an important word. I know bubble is the word of the day, but let's talk about diffusion.
Sure.
How fast does technology end up getting into the system? We saw, when it went from radio to television to, internet, and obviously everything in between, social media, and then ChatGPT. How fast did that diffuse? So the internet was built out and it had a similar sort of forward investment like we're seeing today. And then all these companies, pets.com and all these things, and now they all exist. And by the way, e-commerce became massive. But that diffusion time, so when I talked about the white space, I think we're talking about diffusion time. And I think what we're seeing here is, right now we're, Sam Altman saying, I'm melting my GPUs. I have too much demand
I love that quote.
on our anime, right? Ghibli. What if we actually start building useful enterprise things, not just, a cool cartoon of the three of us sitting here, and all of a sudden you've got agents that have thousands of concurrent things being done, real meaningful transactions and workflows being created all with AI. How much compute horsepower are we gonna need? How much economic value does that create? And why can't we and aren't we? And by the way, we can do many of these things even today.
It reminds me of looking at some of those old-timey movies from the 50s and 60s where you see those huge pools of typewriters and people just banging away on typewriters. And there were there was like a whole cottage industry of people who just type stuff. And then that went away. We have personal computers. So, and to your point, all of this is speeding up. And the ChatGPT adoption rate was one of the fastest, if not the fastest in history. So how fast does this get? Because AI seems to be adding a zero onto its capabilities every year. We're talking about a magnitude of order every year, and you put the exponential math on that, we're getting to infinity pretty soon.
I would think it's weeks. I mean, every week it's like it's the LLM, you'll see
so
Meta
zero
come out
every
with
few
something.
weeks.
Gemini, with Google comes out with something new. You see the next generation of silicon and chip development that comes out. By the way, I love your analogy of the people tapping on typewriters. In the book Human Machine, we talk about gaslighters. We love the word gaslighting. There used to be people in the towns before electricity. Actually, you would climb up on a ladder and light the gas lamps. And by the way, when electricity, everyone said, what's going to happen to all the gas lamps and all the gas lighters? Well, they'll be out of work. We've seen this. And that's why I'm such a techno-optimist in many ways. It's like, look, none of us are quite smart enough to read the tea leaves of exactly what everybody's going to do that gets displaced, augmented, replaced with AI. But what we do know is every industrial revolution that we've had, it's created more economic power, more growth, more capacity, and more jobs. Now, I'll be the first to admit I have 2 daughters. I have a almost 24-year-old that's finishing grad school and a 20-year-old that's at Baylor doing her first year, and she's in entrepreneurship. And she's, saying, I want to go into marketing. I'm like, I don't know. I feel like you can just tap that into ChatGPT. And the point is though, but that's the blind spot that we all have is like, it feels like, well, I could create the visual now. I can create a little graphic. I can use Canva. I can use ChatGPT. I can use this. But if we can see the future, I think AI powers an economic revolution. And going back to the trade wars, I think that's why we're fighting so hard. And I think that's why NVIDIA is being used right now as a bargaining chip.
So
Go ahead.
what do you like in tech right now? Because we are seeing tech stocks fall. Is it a buying opportunity for people?
So let me wrap in my
Yeah.
question. Is it the first movers? Is it the hyperscalers? Are the winners yet to be determined? Like, we haven't even seen them yet. There are companies being formed right now.
Yeah, it's very interesting you asked that. I recently did an interview and I was talking about the reordering of the Mag 7. Now I'm going to use this as a bit of a metaphor, and then I'll give you a couple of names that I really like. But like the metaphor is right now with trade being reordered, there's going to be companies that's going to take a few years to get back to stasis, right? They're going to have to move manufacturing. They're going to have these tariff impacts. And then, of course, you have recessionary forces that they have a big exposure to consumers. So I looked at like Apple and Tesla, and I'm like, even though Tesla doesn't have a lot of reordering of its supply chain, it's very consumer dependent. Like, are consumers feeling good, wanting to spend money, and now they're losing the market. So I don't like those that much. And then there's kind of this middle, which is like the ad brigade companies. It's the Googles and the Metas and the Amazons. Now they're big commerce, big ad platforms. That's really interesting though, because they have a ton of small business exposure. Their marketplaces are very dominated, and it's the consumer again. So it's like, well, I like their cloud businesses a lot. I think enterprises and cloud has to grow. I think that consumers and small businesses, I'm super weary right now with everything that's going on. But then at the top of it, I look at like a Microsoft, which has very little consumer exposure. Most of their revenue is enterprise and cloud and AI. And then I look at NVIDIA, which again, I'm not a pure NVIDIA bull. I actually really genuinely believe like Broadcom, the XPUs, new infrastructure investments are going to disrupt part of their market share. But they're super enterprise centric. At this point, like 90+% of their income comes from these hyperscalers, the $325 billion of CapEx commitments. So I'm like, I like those more. So I'd like to answer your question now after 5 minutes of rambling on. I really like companies that have very low consumer exposure. And I like companies that have minimal supply chain damage being done by this. And enterprise AI build out for the future isn't going to slow down. The best companies in the world are going to see this as smaller, weaker companies with less operating leverage are actually going to be halted and faltered by this whole thing, They can invest big because we know we're going to come out of this. We know at some point we're going to get a Truth Social post that says, I just did the best, biggest deal in the world with China, and we're
going to hear it behind us right here, just
You're
like
gonna
last
hear a roar.
Wednesday.
You're going to hear a roar. And the point is, once that deal is done, the markets are going to absolutely rip. I genuinely believe
Oh,
it.
they did last Wednesday.
was crazy.
Hold that thought. We need to take a short break, but coming up, we're going to be talking about the concentration in chip stock fabrication. And today's runway battle is a look at entrepreneurship through the lens of Formula One racing and the Premier League. So stay tuned. This episode is brought to you by the number 90%. Now, that is Taiwan's share of the global market for advanced semiconductor fabrication, which is really a story about Taiwan Semi. And Dan, there's a lot to dig into, including political history as well, and geopolitics, and tech writ large. But I think this might come as a surprise for some people, but Taiwan Semi is a manufacturer of NVIDIA chips. NVIDIA doesn't fabricate their own chips. It's done on this small island outside of China. And what do you think about all this? How stable is this?
You ever been to Taiwan?
I've not.
Yeah, it's warm. Actually, most of the companies we call chip makers don't make their own chips. Just to be very clear, there's this whole category of fabless. So AMD and Qualcomm and NVIDIA, none of them, Broadcom, they don't make
None of them are chip makers?
Well, they're all chip designers, fabless chip designers. So there's something for the people.
Fabless chip designers.
I gotta stop writing chip makers and then writing AMD and
the media sort of broadly calls them semiconductor and chip maker, and they're doing some very important work. But what we did over the past several decades was we basically outsourced the entire trade. So not only is 90% made in Taiwan, but 0% of what we consider to be the leading edge at this point, going into that CHIPS Act bill, was made in the US. So we had completely 100% outsourced our capacity to make leading edge chips for smartphones, leading edge chips for enterprise and servers, the leading edge chips for automobiles to the world. Is that risky? Of course it's risky. There's this massive macro conflict that's going on. China genuinely believes it has rights to Taiwan, and at some point that is going to create probably a war of some type if we don't settle this whole trade battle. And if I was the US and I said, what would happen if all of a sudden China did escalate the conflict? Our innovation here would stop. Now, TSMC has brought some of its chip making back, is just now starting to make capacity as some of their, I don't want to get too technical, but their newest, we'll call it the newest types of chips that can power smartphones and servers. We had NVIDIA make a commitment to build $500 billion here. AMD, Lisa Su, made a similar commitment. They're planning to bring even newer. So the long story short on all this is we have to mitigate this risk. Part of this trade deal is also about IP, because even if we bring manufacturing here to the US, TSMC's $165 billion commitment to build here, we don't own the IP. So even at a moment where some sort of conflict escalates, we'd be frozen in time, because all their IP sits in Taiwan. This is also a reason I've been a big advocate for a strong Intel. Now, Intel's got all kinds of complexity. They've got all kinds of struggles on their balance sheet. They've got a new leadership. CEO, right? Well, I admire Lip Bhutan. There's some interesting potential conflicts of interest with China that could escalate right now with him and his investments. But we need a strong Intel. We need TSMC to come here. We need Samsung to bring their leading edge here. We need to make chips here. Now, I don't know about bolting phones together here, and I don't know about purses and handbags and textiles, but we need to make chips.
Are we going in the right direction right now?
I think we're starting to move in the right direction. Look, just quickly on the trade stuff. I believe in a lot of what the ideology is about bringing back key manufacturing, building the future's type of manufacturing facilities, which, by the way, are not full of people sewing Nikes together. It is building smartphones and building servers and all these types of things. Having said that, I'm absolutely losing my mind with all the whipsaw. I do not know what to make of it. Are we negotiating with 70 countries? Are we going to get a first deal? Can we isolate China? But they've been stealing our IP for a very long time. And that's besides hacking our infrastructure and stealing our IP, I mean, that isn't a friend. I don't know how else to describe that, but we build a lot of great things. We develop a lot of great things here. And for a long time, they've taken it and used their independence, their sovereignty, to excuse them for taking our technology.
What's one of the biggest reasons why we don't produce more chips here already in the US?
Long history?
The same reason we outsourced almost every industry in the world. And remember, on a services and software basis, we actually have a trade surplus with most parts of the world. We're not talking about that a lot. But that whole sort of sector of manufacturing, we've really struggled. Taiwan's been a good partner to us, and they make a great product. And Intel, of course, having faltered a little bit and only made chips for themselves, so they weren't fabricating any leading edge or advanced chips for anyone else. They're changing that now. Intel has a foundry, and they're trying to get some traction there. But it was just a big oversight. I mean, at some point, like every accordion effect of every market, you take the accordion out too far. We outsourced all of our industries, and you saw Elon Musk proved, and again, difficult character, so I won't paint whether people like him or not, but he actually did show that we could bring manufacturing of automotive back here, build an advanced, capable automobile at a competitive price in the United States. So it is possible, but it takes a lot of risk. It's just not as easy to do. And in other parts of the world, even our own car makers, GM, Ford, they all did, Ford did better, but a lot of them outsourced a lot of it because the economics were better. And we reward economics that return value to shareholders.
Hard pivot here. This week's Runway Showdown is all about execution in entrepreneurship. Maybe there is a tie-in. First down the catwalk, it is the gritty midfielders. Scrappy boots, tape-wrapped ankles, and a nose for the goal. This look is pure hustle. The entrepreneur who plays both ends of the field, grinding out wins from pitch to product. This footballer has been bruised by market cycles, but still controls the tempo. But right behind him, smooth as carbon fiber, comes a precision pit crew, matching uniforms, calibrated tools, every moment measured in milliseconds. This is one seasoned operator, optimized, systematized, and ready to scale. So Dan, who wears the execution better in today's market? Is it the street smart player who's building it brick by brick, or the highly efficient tactician who shaves off tenths with every turn?
I'm a brick by brick builder, but
you like F1.
I love them both. So we're recording this on the day of the quarterfinal of the Arsenal Real Madrid game. I've got my hat in my bag, my Arsenal hat. I'm wearing it around town, but I'm a diehard F1 McLaren fan, and it's been great because both my racing team and my soccer team were terrible for about 5 to 10 years, and now they're both terrific.
That's great.
I love it.
Dan, this one's a little over my head, not gonna lie to you.
Yeah, I've got the sports stuff, right? The sports stuff.
But I wanted to kind of dig into some of your personal background.
Okay.
You had the title Chief Executive Officer CEO at the age of 28 for a company called United Visual. Talk to us a little bit about your career journey and some of the biggest lessons you've learned.
Yeah, I had a really interesting, fast start, and as I've gotten older, I've become more comfortable talking about it. But my wife and I, now we've been married almost 24 years.
Congratulations.
But we had our first child out of wedlock. I was 19. I was 20 years old when I found out she got pregnant. 21. I went to school full time. Ended up going to work for my dad, who was an entrepreneur himself. For just a very short period of time. And I was super motivated. And the biggest thing that happened to me was I was motivated because I felt like such a failure that I knocked up my college girlfriend at the time. Like I said, it's worked out beautifully, 3 children, 24 years of marriage. But at the time I felt like, so I wanted to really prove something to the world. Went to work for my dad, finished my undergrad. Really quickly, my dad was in trucking. And, after a couple of years, I'm like, well, I'm going to take over the family business. All will be well. My dad explained to me that I needed to get my CDL and go on the road for 2 years if I wanted to take over the business. I said, Dad, I don't like trucking that much. Ended up getting into tech, into music, because I was classically trained in the piano. Got into music technology, started actually selling in a retail store, found out I was really good at selling technology and music. It was like systems for DJs and production. So the long path of this was I went from that to working at United Visual when I was just a few years older, selling corporate, because that was an enterprise technology play that sold video conferencing solutions. I did really, really well at that. Ended up getting hired by a bigger manufacturer. 4 years later, United Visual comes back to me, asking me to come back and run their sales. In 1 year and after that, they asked me to run operations. And then within a few months, they actually asked me to be their CEO. 67-year-old company.
Promoted from within.
Promoted from within.
So not even
at 28 years old, running. It was a couple 100-person company. It wasn't a huge company, but it was a good-sized business, and it was an old, established union shop, integration shop, on the SI side. Everything's possible. I mean, that's one of the things I learned. You got to grind, you got to work hard. But then I obviously came up through tech, learned chips, learned networking, and so that's. Now we're going 15, 16 years into the past of building this research company. But there's a whole lot of great journeys, 7 books I've written, some of them document that, of going from kind of being in music, being in tech, being passionate about it, learning the industry. And by the way, you can go to school for finance, you can go to school for computer engineering and science. Everything now is about how quickly you can unlearn, relearn, and learn again, because the bottom line is nothing I learned in college, and I did my master's, and I taught graduate school in the middle of all that. Nothing I did in that whole period of time has had as big of an influence as just getting your nose to the grind and learning every day.
Great story, and we got to end right there. We have wound things down at Stocks in Translation. Be sure to check out other episodes on our site or wherever you find your podcasts.